It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, January 25th, 2016. Cracking open this last week of this first month of the year 2016. What a month it has been. Boy, great to see you guys back here. Hope you all had a great weekend. Hope everyone's warm and dry. Boy, oh boy, that storm clobbered. I believe the word would be clobbered the East Coast. Hope everyone's safe and sound, warm and dry, and of course, boy, what a great weekend to be trapped indoors. Awesome sports on television, and we come back this morning, open up our charts, and we have another volatile, voluminous, filled with opportunities in today's trading session. Hope you guys had a great time with us. We had a great day in our live trade room as well. Enough chit chat though. We got a busy week in front of us. We got FOMC coming up tomorrow. Tomorrow starts. Wednesday will be the announcement. And of course, remember, at the end of every month, you end up seeing traders taking bigger risks, which usually means more volatility, if that can even be possible right now, right? Now, got a busy newsletter in store for you guys. This is always an important one as we kickstart a new week. Crude oil is bearish after giving back all of Friday's gains, but 3 legs down and a parabolic wedge to finish today's session. Tells us the bears are likely going to take their profit, so we will look for a bullish correction before another leg down for the bears tomorrow. Very interesting chart here tonight on crude. The E-mini S&P is also bearish, but also with a measured move and a monster overshoot on the S&P of that bear channel. We expect the bears to take profit as well, and we expect the bulls to correct this higher before the bears take another shot at selling it tomorrow. Got a good plan for both sides of the market tomorrow for the S&P. The gold is bullish, but the buyers appear to be walking on thin ice this evening after a break and retest of a bullish spiking channel appears to be struggling to finish the move higher. We got a really good chart to look at on gold tonight. Just a moment for that. On the euro, the 6E euro currency futures, that is, the euro is bullish this evening, but we completed the measured move at the highs of the channel, which tells us to stay patient for the next buying opportunity back at support levels below. I've got a great plan for tomorrow's session for crude, E-mini S&P, gold, and of course the euro. Before we get into tonight's charts though, I do want to remind you guys to make sure you're watching this video on our trading blog here at Sideways Markets. If you're on our YouTube channel right now, not to worry, there's a link buried in the description of this video. Follow that link and it'll send you over here to our trading blog. First of all, upper left-hand corner, I've got an invite for you to come out and join me in the live trade room as a guest for a day or maybe 2 or 3 days. Grab your free pass to test drive our live trade room in the upper left-hand corner. In the lower left-hand corner, you can register for our nightly newsletter mailing list. I'll send you an email every evening when my newsletter goes live. I promise no spam, only the newsletter. You can trust me on that, not to fill your inbox up with junk. Make sure when you register for that newsletter mailing list, make sure you verify your inbox. I'm gonna send you a verification email. Right below the video tonight, you'll see a spot to download all the charts that you see me using in tonight's video. You can download those charts right below today's video. Over on the right-hand side, you can register as a trial member. You can learn more about what it means to be a member here at School of Trade. And don't forget, no question too big or too small for our live support on the right-hand side of the trading blog. Guys and gals, busy week in front of us. Let's get this party started. Now, like I talked about, last full week of the month of January, we finished up the 25th of the month. Tomorrow is the 26th. This is going to be the beginning of the FOMC announcement. We're not going to worry too much about FOMC until tomorrow. We'll talk about that in tomorrow night's newsletter. 8 times a year, the Federal Open Market Committee. This is one of the big events that we have to keep our eyes on throughout the year, right? We got one starting tomorrow. Again, it won't affect us too badly tomorrow, but definitely tomorrow evening, our newsletter, we'll talk about a strategy for FOMC. Okay, outside of that, though, for tomorrow, we've got news from the Case-Shiller at 9 o'clock. 10 o'clock is going to be the big consumer confidence number tomorrow morning. That's going to be the one that gets the markets moving. That Case-Shiller home price index. Home price indexes aren't not as popular as they used to be, but definitely 9 o'clock and 10 o'clock, we have major news tomorrow. Again, no worries tomorrow about the FOMC announcement. You just make sure you set your reminder 5 minutes before and 5 minutes after that news that comes out at 9 o'clock and 10 o'clock tomorrow morning. So lots of exciting opportunities for us right throughout the session tomorrow. let's jump right in. We got crude oil. Crude is bearish after giving back all of Friday's gains, but 3 legs down and a parabolic wedge to finish today's session tells the bears to take their profit, so we'll look for a bullish correction before another leg down tomorrow. Now we have a bear channel that wants to complete its rotation down to the lows, but the measured move appears to be getting in the way this evening, which tells us to expect an undershoot of that channel low, which will likely kick higher into an overshoot up at the highs, which makes perfect sense before the sellers look again tomorrow. On the other hand, a new higher high, and if the buyers can hold the pullback to the moving average, you got to give the bulls the confidence now to send price back higher tomorrow. So be alert after the bullish correction off these lows, watching to see literally what happens right at that moving average. So as you can see here, we have 1, 2, 3 pushes lower. That also combines with a parabolic wedge. A wedge, of course, being a kind of a directional triangle, right? That's the difference between a wedge and a triangle, all right? Triangles will go sideways, right? And you'll use the directional bias going into it, right? A wedge would look like this, where it's got some sort of direction to it. And believe it or not, a wedge is a reversal pattern, whereas a triangle is a continuation pattern, right? Just a small difference in the way those look, and a very small difference in the way that they are drawn, but a very big difference in how they react. So you can see here, 1, 2, 3 pushes down. We don't see this very often, kids. A bearish parabolic wedge that overshoots the low? No, not going to happen very often. Usually it's going to break up, pull back, and then launch higher. And just in case you're wondering what a parabolic wedge looks like, it's a wedge that each leg gets a little bit steeper, right? So it almost gains its strength as it goes lower, right? Almost getting sucked down to that measured move. So bottom line, the vast majority of sellers have to look at this as a just gift from the trading gods right now, right? I look at it that way, and I'll be taking the majority of my profit off at this measured move down. The biggest problem I see right now, though, is that we have a channel, and we're looking really bearish right now. But you know, if we snap higher, that's going to be an undershoot of that channel, and a pretty big one at that, Matt, right? A pretty big undershoot. So undershoot of the low, overshoot back at the high. It has a definite self-fulfilling prophecy to it. So everything really lines up right now. The most reliable trades. Remember, as professionals, we don't know we can't predict the future. All we know is where the most reliable trades are. And right now, trying to keep selling lower is going to be the less reliable way to do it. The more reliable trade for the bears is going to pretty much be the following. We see price break higher on profit taking. The buyers can't hold the pullback, and we'll look to sell it right back down. If we do get that, then keep an eye out, look left, and start thinking a 3-legged move down. Very rare. We don't see 3-legged moves without big corrections between the second and third legs very often. But again, let's talk about the bears, for example. The bears, what they really want to see here is a break higher on profit taking, obviously. The buyers want to see them hold this pullback. If they can't hold that pullback, though, that's where the smart sellers now, again, getting a real nice gift here from the buyers, now get up off those lows, and now we have lots of room to sell, right? Get up off that low. You know, remember, this is when I always remind myself, and I'll remind you, the old rule of thumb for being a trader. Sell high, buy low, right? I don't want to sell down at these lows. I want to get price up off that low, but then we have to make sure after we jump higher, we have to make sure we catch those buyers, right, failing on that pullback. Now, again, that's where if we do get that exact situation, we now call this 1, we call this 2, and then again, difficult for me to give you a definite number, right, but that third symmetrical push down, right? That's where you'd be looking for that target. It all depends tomorrow, obviously, how far we correct back higher. Now, let's be empathetic to both sides, right? Big move down like this. Heck, if you look left, I mean, this is only about halfway of where we were from last Wednesday, right? So we really have about a 50% pullback, right, off last week's big run higher. So for all we know, this might just be winding up, right, for a big push back to the upside, right? I mean, let's not just get blinded by today's bearishness. This may just be a pullback, right? Measured pullback, right? Back to move higher. Well, in this case right now, the bulls really have to see some sort of proof that they're even showing up at this party right now, right? 2 bullish days last week, followed by giving it all back today. Definitely can't have the bulls looking very confident. What we're looking for here now, if you want to be a bull, is pretty much what we saw earlier. We want to see a bullish correction, but then we got to hold that pullback. If we hold that pullback, this becomes controlled by the bulls. And until we see the bears able to hold a pullback, right? Until the bears can do it again, the bulls have control. Now remember, in a bullish market, the buyers are going to keep buying until they hit resistance, right? In a bearish market, the sellers keep selling until they hit support. So if we hold that pullback, the only thing we have to worry about for the bulls tomorrow is just don't buy into those resistance areas. Okay, remember what I always like to do is look for a new higher high, get off that high, right? And then you can be a buyer. That way you're not buying directly into resistance, or remember, we don't buy high, right? We buy low. So right now, like I said, I think the most important information is going to come. What happens after we get that correction, right? If we hold, we look for buying opportunities up to resistance areas overhead until the sellers, right, can hold it on the opposite side. If the buyers can't hold that pullback, which, tough to say at this point, right, but tomorrow we'll be looking for it. If they can't hold that pullback, then we'll look for a 1, 2, 3 legs down. What if price just keeps going lower? If price goes lower, this really comes into real dangerous territory. I'm still going to be looking to get price up off that low, a failed pullback to sell it low, right? So again, really the only thing you got to worry about here is if you're a buyer, don't buy into resistance. If you're a seller, don't sell the low, right? Follow that rule of thumb, okay? And you'll be just fine. Again, I would expect, though, the most people will be waiting for that test of that moving average tomorrow to really sink their teeth into something here on the oil market. How about the S&P? The S&P looks somewhat similar to it, doesn't it? S&P is bearish, but with a measured move and a monster overshoot of the bear channel lows, we expect the bears to take profit. And we also expect the bulls to try to push this thing higher before the bears look for another sell. Sellers will stay patient and wait for the buyers to fail to hold a pullback, just like we talked about on crude. And the bulls, they want to see a successful hold of that pullback to get a decent shot to buy back up to those channel highs. Now, I get this question a lot right now. Do we trade correlations? I get this email a lot. Joe, it appears that the E-minis are correlated. It appears in 2016 that crude and the equity markets are correlated. First of all, the reason why crude and the equity markets are highly correlated is because crude is denominated in dollars. And the dollar, right, is the dog that wags the tail. The reality, though, is correlations are oftentimes mixed up or confused with causations. Now, correlations, in my opinion, okay, unless you're high-frequency trading, correlations are ultimately worthless to the average day trader. By the time we figure out the correlation's effective, it usually stops working. Many of us have already learned that lesson earlier in our careers. Now, causation is a different story, right? It's the old scenario, right? If I poke you here, you do this in reaction, right? If I can prove that beyond any reasonable doubt, then I can prove some sort of causation, right? I did X and I get Y. Every time this happens, I get that, right? It's not correlated, it's causation, right? That's the big difference. Don't be fooled by people preaching about correlations, because most of the time we can't tell which one comes first and which one comes second. And then usually by the time we figure out where the correlation's beginning, we usually see it break down and we're the one left holding the bag, almost as if they hope that we do it that way, right? Causations are a lot more difficult to find in the market. The only real strong causation is the US dollar index, especially because the basket of currencies, the biggest piece of that basket is the euro, right? And so, of course, euro-denominated currencies or commodities or the euro currency future, that's really the only solid causation, right, that has some sort of validity to it, right? Everything else is just, a lot of it is our mind playing tricks on us. Our brain wants to make sense of things, and so we tend to put more emphasis on things that, don't really have any value. So, put that to bed tonight. S&P looks very similar to crude oil, doesn't it? Here we have a bearish channel. The only real difference on the S&P is we have a channel overshoot, rather than on crude we have kind of a parabolic wedge overshoot, right? So in my opinion, they're both pretty much telling us the same thing. Here we have an oversold market. Now, I hate the term oversold, but technically speaking though, this market's gone too far. And again, I should probably also tell myself that there's no real reason why the market has ever gone too far, right? There's no reason why this market can't keep going lower. Okay, let's get that right off the bat. But technically speaking, though, remember, I'm not here to predict. I'm here to think where the most reliable opportunities are, right? As a professional, my job is not to predict the future. My job is to understand where the reliable opportunities are. And after 3 attempts to go lower, after a monster, if you will, overshoot of those lows, we do expect sellers to see this as a little gift from the gods and say, boy, I got lucky on that one. I better buy back my shorts, right? Grab some pants too. I better cover my short here, right, and take my money while I can. The buyers see this as well, right? The buyers see this. This has its own self-fulfilling prophecy, and so we tend to see price overshoot, right, at the opposite side. So the buyers are really licking their chops right now, right? They're really getting ready to get a nice buying opportunity off these lows. But like I always say, in a bearish market, you don't want to be a buyer until you see some proof. We talked about that proof, right, around the moving average on crude oil. So 3 legs down, overshoot lower. Let's talk about the buyers. Let's talk about the sellers, right? If you want to be a buyer, pretty simple. We want to see this price get above that moving average and hold that pullback, and then we can look for those buying opportunities up to the overshoot, right? Once we get up to the overshoot, then we start looking for the buyers to fail. The sellers will hold, right? And then we go right back down, rinse and repeat. What about the bears? The bears are looking very similar to what we're looking for crude, right? Go up. Can't hold that pullback, right? And then that's going to give you a sell right back down. The one difference here, though, between crude and the S&P is that we know in a bearish channel, our best odds are going to come up around those highs. So if we just get a little tiny break higher here, and then the buyers can't hold, right? This is likely going to be something more than just this channel, right? So if we see the buyers fail to hold that pullback, I doubt they're going to do that, but hey, I mean, again, I can't predict. All I know is where the reliable trades are. So if they happen to fail to hold that pullback and we tumble lower, chances are this will become some sort of spike in channel, right? Because this is just screaming strength, and then you're going to want to sell the high, right, of that spike in channel. Does that make sense? Right? Because in all reality, what should happen here for these E-minis is we should see it hold, we should see it grind higher, and then we can look for those buyers to fail, right? Sellers to hold, and then sell it back down. That's what every bear has to be looking for tomorrow. But again, we may not get the postcard scenario. We may get this, right? Where it may jump up. The buyers may try to buy that pullback, but they may not be able to hold this, right? Again, if crude takes off the downside, we may see this market follow tomorrow. And if that's what happens, then again, we're getting a big undershoot of the high of that channel. That tells me that channel is now busted, and we're probably going to see this. I originally thought it would be a flag, But this does not look like a flag. This price action right here looks like they are dead in the water here right now. Even a cute little fake out right at the low, right? Somebody actually sold that low. Somebody actually sold that low. Probably a stop run, right? The cherry picking buyers, right? They bought it, they get stopped out, right? And then it goes higher. Welcome to the S&P. Welcome to real markets right there. That's what they do all the time. That's why you don't buy in a bearish market until you see proof, right? Because if you bought that nice green candle right there, look, right? You probably either went through a lot of pain or you get stopped out for a loss, and it's going to laugh its way all the way going higher here. So again, I would say if the Bears maintain control, look for this, right, as a bearish spike in channel, and then again sell those highs of that spike in channel, right, on the way down. If you look left on this, you'll see we're only a little bit away here, right, from that big support at 1861 and a quarter, right, and then down to those 1840 areas, right, where we started last week. So it's going to be an interesting scenario what happens here on the S&P for tomorrow. You got to plan for it, though. You've got a plan. Let's keep going. Now, very interesting chart. You can see I put together a novel on the left-hand side. I'm trying to keep you guys on your toes here. Let's talk about this gold right now. Gold is bullish, but the buyers appear to be walking on thin ice this evening after a break and retest. Here's your break. There's your retest right there. Okay, now we can easily see the bulls in control this morning with a spike in channel, right? See the spike in channel up? Pretty well marked there. But look closely, and you can see the break and an attempt to go higher at 1130, which I have marked right here. Okay? Then we see a bear trap. Look, they go lower, they trap the low. This is not making any sense, right? If this is a spike in channel, why isn't this market just hanging out up at the measured move right now? Right? Remember, you guys are experts on spike in channels, but in case you weren't here last week, remember what typically happens. These spike in channels are huge strength patterns, right? We look for 1, 2, 3. The magic number is 3. We typically get a break back to the base of that channel, right? And then we catch the sellers on the wrong side of the market. We buy into their stops, right? And this becomes a measured move. A, B. We do a lot of work with spike in channels, flags, triangles, wedges here at School of Trade. You don't need indicators if you know what candlesticks tell you. You know, indicators are lagging. Candlesticks are right now. And in my opinion, do you want to wait for the information, or do you want to get it now? Right? I want it now. That's why we read candlesticks. No, it's not the easiest way to do it, right? But when was the last time the easy route was worth it? Okay, very rarely a shortcut leads you not to where you want to go. Okay, so anyways, bottom line is that bullish spike in channel. Now, ready? 1, 2, 3. Now back to the chart. Wait, what? That doesn't look like the runaway bullish market that a spike in channel tells us, right? There's your spike up. There's your channel. And look, 1, 2, 3. Right? It took them, they got to it late, 3 pushes lower. Okay, I'm going to give you the benefit of the doubt. It looks like you broke here and tried to go higher, but stalled out. Fake break the low, try to go higher, but what is up with this? Why are we not pushing higher here right now? Okay, so bottom line is, this looks like this day ended in a range. It doesn't look like this day ended with the bulls in control, which is exactly what should have happened with the spike in channel. Now, again, I can't predict the future. For all I know, this thing continues, right, to finish its move to the measured move like a good spike in channel should. But right now, there is smoke billowing out of the engine right now for the bulls. So, let's take a look a little bit closer here. Let's see here. Now, with that said, the buyers must prove they want this on the next pullback, because if they fail, the sellers are going to see the exact same thing I'm selling, that I'm seeing, and the sellers are going to try to run this price right back to that big round number of 1100, which also happens to be the base of that spike in channel. If the bulls can hold the moving average pullback, they will look to complete the measured move. But if they fail, then we look for a failure back to that spike in channel again. Right? Bull spike in channel. It's a strength pattern. Right? If they fail on the retest, right? If they fail, if they can't get it, it's going to make a run back to basically the flagpole, right? Or the spike pole, right? Before the spike in channel. Okay, so that's going to be your target, right? That's going to be the target for those bears. So now we look at this in terms of spike and channel up. We know the spike in channel, what it should have done, right? Corrected lower. We should see this price continuing. They should hold that pullback, and if they hold that pullback, we'll finish the job. But again, in my opinion, it looks like the buyers tried, and they held the opposite side of that channel. See, that's a dead giveaway right there, right? We see this all the time, where we see a bull channel, right? The buyers have it, we're getting rotation, but then all of a sudden it holds the low of the channel as resistance. And that's usually a big kind of clue to those bears. And then, of course, if they can hold the next pullback, they'll attack that, right, that price going lower. Well, in my opinion, again, that's what happened here, right? Bull spike and channel up. It looks like they held the low of that channel. Now, it's a little bit tough to tell. Then we fake break that low, and this is the one. It's do or die right now for these bulls, okay? If you're going to be a buyer right now, they got to hold that pullback. Right? If they hold that pullback, then we look for price to continue its merry way up to complete, basically the completion of the spike in channel, right? A, B, C, D on the way up. Okay, the only time, right, as we go higher, you can stop, you want to stop buying once you see a new lower low and the sellers hold on the opposite side. That's going to be what we're looking for the bears. Okay, if the bears want this, they are expecting now the buyers not to be able to hold this pullback, but in my opinion, that's too early to be a seller. The bears are going to really attack this thing once they make a new lower low and they hold that next pullback. That's where the bears are really going to start getting aggressive. Okay, I think if you look to sell anywhere inside of this little range right here, I think you're being a little bit too greedy on it. I think you're being a little bit too aggressive. So what I would wait for is exactly like we've talked about. New lower low, right? Get those sellers interested. Show me proof at the moving average. That will give me the green light now to start gunning for those lows, right? The initial target, though, is going to be back at the base of that channel. That's where I got the 1100 from. The next target down is at 1096.1. Very interesting chart, and a lot of really little clues on this chart that I think a lot of traders are probably going to miss tomorrow. Hopefully you're not one of them. Now, don't forget, we do have rollover on gold scheduled for later on this week. We will roll over to the April 2016 contract on the gold, most likely towards the end of this week. Last but not least, the postcard chart of the evening. The euro is bullish this evening, but we completed the measured move at the highs of the channel, which tells us to stay patient for the next buying opportunity back at support levels below. 3 pushes higher today, combine that with a measured move at the channel high, tells the buyers to take some profit and look to buy more after a bearish correction. 2-legged correction that consists of at least 10 bars off the highs. We will be looking for the next buying opportunity at the channel low, but even better would be the buy zone down around 83.60 or 82, right, or 82.80, right? This buy zone right down around here. This would be the delicious area to be a buyer, because getting down into 83.60 would mean a head fake at this recent swing low. That's where all the buyers who are holding their swings, right, all the bulls who are in this move right now, their stops are parked below that 83.60 area. So a little bit of a tap lower will not only get the sellers involved, right, which will possibly get on a failure to buy it back up, but it also gets the buyers out of the market, and now they've got to chase back here with me. One of the biggest reasons why markets tend to move towards prior swings is because when the bears are in control, they're going towards support. They're not hunting my stop. They don't care about me. All they know is in a bearish move lower, they'll keep selling until they get to support. When they get to support, why does price usually go lower? Because there are stops waiting down here. Think about it, right? If you're a buyer and you've got your stop below 83.55 and I tag your stop, you're going to sell your way out of your position, right? What's going to happen? It's going to push that price even lower. When that happens, sellers often confuse this now for a bearish market. They try to sell the next pullback. If they're successful, the bears will then start attacking. But if they're not successful, that obviously is what the bulls are going to be drooling over, right? So we run out the buyers below that last swing, right? Little head fake down around 83.55, 83.40 area. Get the bears to take the bait. If they can't keep it going lower and they fail, buyers will attack. And they'll jump in right above those stops, right, as it pushes higher. And then, again, talking about the bull side right now, right? If you're a bull, what you're looking for is, again, I would be looking for the most reliable trade. Fake break that low, right? Just head fake that low. Let the sellers try to sell it. We know where their stops are going to be, and we can look to buy right into their stop. In that case, though, your targets are going to be up around this major resistance area overhead, as well as this 8,800, because then this puts us in a three, quite rare, doesn't happen very often, but a symmetrical three push move, right? A third measured or symmetrical leg higher. Okay? Now, what if the sellers hold? If the sellers hold, new lower low, right? Sellers hold, then they're going to make a run for that target back at the beginning of the day today. Because I think a lot of people probably see this as a spiking channel, right? It's really not a great looking channel because it has to shave off that low. So I see this more as a spiking channel more than anything else, right? So breakdown, seller failure to be a buyer. If sellers break down and they hold, right, that's where the sellers will get the confidence and just don't sell into support on the way down. All right, guys, got a good plan here for tomorrow. I hope you learned something today. I hope you can use it to earn something tomorrow. And don't forget, you don't have to do this on your own, guys and gals. Every day we open up our live trade room at 8 a.m. Eastern Standard Time, and we do all of this together in real time. We have a great free trial here at schooloftrade.com. Join the free trial on our website. Learn more about our 3 levels of membership. We have a great place for everyone, whether you're a brand new trader or you're a seasoned veteran still trying to figure out how to crack open this nut they call day trading. Don't forget, we have plenty of folks, qualified individuals standing by to help you out 24/7, 365. If you have any questions along the way. And on that note, I will say goodbye for this evening. My name is Joseph. Thanks for being here. Don't forget to give me a thumbs up on the YouTube video. Share the video with a friend. Send me feedback to JJ at School of Trade. And as always, be well out there, all right? Be nice to each other, will you? And stay warm out there if you're still snowed in. Hopefully you can see your car, your mailbox out front. I won't even tell you how disgustingly ugly the weather is right now in Los Angeles. It's horrible. I'm getting a suntan just sitting in my office right now. Anyways, bottom line is, my name is Joseph. Thanks for watching. I'll see you tomorrow, 8 a.m. Eastern Time for members, 8 p.m. Eastern Time tomorrow night, right, for our next edition of our nightly newsletter. Adios, amigos. Bye-bye for now.